Listen only mode.
Hey traders, what's going on? Jamie Saettele here. It is May 15th, no, sorry, May 13th, 2015. Got your midweek strategy webinar here with SB Trade Desk. So first, Stefan, right away with the question, what's up, man? Let's talk that darn euro yen. Sure. We will get to it here in a moment. I want to go through my prepared statements, remarks, if you will. Have a nice sheet of things that I want to discuss. Three main topics, really. Obviously, the dollar. It's quite interesting. Each Wednesday, the last 3 Wednesdays with these webinars, each Wednesday has been kind of a dollar panic low. It's weird. If I pull up my screen, for example, remember this was 2 Wednesdays ago, the 29th, and we were at a big support level. We did bounce off of it, went back through the median line, traded around it. Was of the mind after we took this out that we were going to get back towards either this sliding parallel or upper parallel, test weekly reversal resistance at 11,972, and that sets up for the big short. Didn't happen. Instead, we've just kind of fallen apart. This was last Wednesday right here, this day, again on the same support line, and this is obviously right now. So let's get into this US dollar. Look at both dollar indices, actually. This is the the Dow Jones FXCM dollar index, comprised of just 4 currencies, but pretty good representation of general dollar direction. Obviously, Aussie yen, euro, and pound. And what we've got here, we've broken, this again. This is, if you look at the weekly chart, you see where the slope comes from. We have broken the support, okay, from this parallel, which was from a high back here, and did cross the low in mid-January. So we've broken that level, and the next level really probably is not until this sliding parallel that goes off of lows in May and June 2013 goes through a gap as well, which gives it added significance. And that level, at least this week, wouldn't be until about 11,550. Next week, slightly higher, 65, and the week after it actually is 11 at the very end of May. It's about 11,570. So 11,550 to 70 for the as far as uptrending support comes in for this dollar index. Okay, as you can see, this is the 5th week down, and we are getting into support, but within downtrends. So you have slope here, but it's downtrend support. So that makes it quite difficult, of course, to to buy against. You want to buy against upslopes, right, and sell against downslopes. So you could expect some sort of a bounce or consolidation here. That's been the pattern at least the last couple Wednesdays. Sell off hard Tuesday, Wednesday, and then consolidate for the rest of the week. Okay, so that could happen. We'll see. Not much, to do from a trading perspective right here, though, as the market has declined into a support area. If I look at the other dollar index, this gets pretty interesting. Flirting with a broader break, okay? And this one is more euro weighted. This is the ICE dollar index. So a few interesting points on the short term. One is, you get support down there. One is to watch for this is right here. This is the February low. Also, as you can see, we're at new lows, for the month here in this dollar index. The euro dollar, however, is not yet, although it's pretty close, 1371. The high is what, like 92 or 91. So we're very close, but we'll see how the day finishes. But the euro, against the dollar is not as strong, I should say, as the dollar index is weak, if that makes any sense. And if you look at dollar Swiss and euro dollar too, dollar Swiss is not as weak as euro is strong. So there's a bit of fracturing in the market. But I want to point out this index because the importance of the February low, I don't think really can be understated. 93.25. You also had a spike high there on the 16th of January. You would have a sliding parallel down here as well. So, in the coming days, you might want to keep an eye on this area of February low. What gets really interesting, though, is the long-term chart. And by long-term, I mean monthly. Do you remember this chart back? I posted it actually to the site on, in fact, it was in March. It was to the front page actually, and we had pointed out a long-term structure that could end up providing some pretty big resistance for the euro or for the dollar in general. That certainly happened. Just 2 months later, we've erased this entire month of March and are actually already coming into a level that could provide the first support. You can see here the circled areas, old resistance. Okay, old resistance in 2009, 2006, and 2010. We're getting into that area now. So, there's the February low. It's pretty much on par with this first line here. Okay, so something to keep abreast of as far as the bigger dollar picture is concerned. All right, so let's look at the individual pairs now. We'll start with the euro. Euro trading 1370. When I look at the weekly, and as I went through, we had two slopes here, right, that were indicating big resistance. And last week, if you remember, we were able to identify that day, or even ahead of time, that we could get a pretty important top at 1380, 1390, right? Reason being is 1388 was the February 25th high, and it intersected perfectly last Thursday with the final parallel that extended from the downtrend that had cut through so many important inflection points, going all the way back since the origin really of the euro downtrend, and especially since last October, okay, and into the acceleration of the euro downtrend. So the fact that we had traded into that level last week, 1390, and reversed so sharply, right? We had a J spike here, reversed so sharply, and then had declined fairly deep into into what was, I guess, considered an upslope, held the median line, but coming off really stuck between a rock and a hard place, right? Coming off of much bigger support, much bigger resistance, and into this old support here, okay, turn support, I should say. The fact that we had come off it so hard kind of told me to expect a deeper move lower, okay? And really that was, what I was expecting up until this morning, when I guess retail sales came out, or whatever it was that came out, and the euro basically traded this whole day's bar. Okay, we were trading like 1220 before that, which is actually where we opened the month. You can see opened the month at 1221. So here we are on May 13th, and we pretty much have the entire month gains, to thank from this morning's move. Okay. So where from here, right? You don't really care about the past as much as where we might be going from here. Well, look, we're still at this level. Obviously, near-term momentum, suggests that we're probably any sort of rally or any sort of decline probably finds buyers, and I say that because you've got really, overbought. 240 is actually divergent, but you've actually got really overbought hourly, right? And very overbought hourly RSI, is typically not toward. It doesn't happen at the end of a move. It's usually more towards the middle um, of a move, and you tend to back and fill. You might get a dip and a rally, or something like that before you get to an actual top of some sort of more importance. So where to from here? Well, if we look at this daily chart, we can see a few slopes here, where support might lie. 112.90 really sticks out to me as support. You can see here that's the high on May 1st, actually. So that would be, considered the opening range, high, if you will, for the month, 112.90. It's also the 5/8 high, 112.90. So you've got 112.90 that sticks out. Obviously, this slope here, which is a short term, or not necessarily, it's been going up for a month now since April 13th. But that slope could end up intersecting over the next few days with 112.90 as well, as you can see here. So 112.90 sticks out. If I go even shorter term, okay, say 60-minute here, use this slope, which I use these highs and lows here from 511, okay, 511, and this is 511 as well, though it's the Asian session low here, so that would actually be 510 there, and or 512, sorry. And this slope might help identify a low. I have 112.89, 112.90, what have you, basically circled, and that would come into play tomorrow morning during the early US, late Europe, early US, for 112.90. So if you did get a pullback from this move, the high volume levels right here at 113.06. So as far as a trade plan is concerned, 112.90 to 113.05, basically, where you would want to look for support in the euro dollar. And if that fails to hold, then you would, go back, return to the possibility of a top coming into play again. But again, the near-term momentum does not suggest that we're going to have an imminent reversal, right? If that was going to happen, we would have cracked this median line already and been headed towards a lower parallel, at which point we would have looked for, indications of some sort of low. So what about the top side? Well, there's two levels to consider on the top side, I think, at this point. One, you do have the magenta upper parallel as a target line over the next few days, and tomorrow it intersects basically with 114.50, very close to it. Okay, 114.50 is actually the February high, right? So remember, we were looking at the dollar index, the ICE dollar index, which again is like 57% euro or something along those lines. And the February low there actually came in as really big support on that very long-term slope. So 114.50 might end up being, a decent area for a pullback, or at least a level, a magnet level, if you will, an attraction level for the euro dollar, 114.50. The next level, which might be a bit aggressive, but that would be 115.30, which is the early February high, right? So these are the February highs that we had in late February for euro, and the February high 15.30 is where you could, kind of capitulate potentially. For me, 114.50 is of more interest at this point, than 115.30, based primarily on the fact that you have this slope here, okay, slope resistance, although within an uptrend. By the way, as far as the next resistance on the downside is concerned, as far as negative downslope resistance that you would want to sell into, from a swing standpoint, at this point, it's probably not. This is the last one that we're at right now, right? And it's looking like, for all intents and purposes, it's going to fail. The next one for me probably is not until this median line all the way on the monthly, which this month would actually not be until 116 area, okay? A little above 116 actually. So not too keen on looking to be short the euro. I mean, pretty amazing how quick things can change, right? We were, almost a couple hundred points lower just a few hours ago, and like that, boom, the market's made its decision that it's not going to respect this final slope resistance. So no need to fight it if it's not working out. What else? Let's look at pound dollar. Pound breakouts kind of all over the place. So there we go. Okay, pound dollar is working on its 7th consecutive rally. You can see the very long term, right? Very long term slope, all median line. The blue lines, which were formerly red, which were huge resistance. Once those gave way, as it did on, I guess that was Monday, took out the euro. We've just continued higher. I mean, it's been a fairly relentless move. The trigger line, if we're long, again, we're getting close to a level. I think you could get something 157.84 December high. We're at new highs for the year, by the way, in the pound. This is the year open. Okay, the magenta line 155.50. That level could provide support. The level of more interest to me for support, bigger picture support, is going to be the magenta line. Again, this is slope and a parallel that extends through the gap. Okay, and if you remember, we did the same thing with dollar yen, right? Slope, and it was really long term, and it was slope that went through the gap that ended up getting, crossing through the lows back here at the very end of April. We'll get to dollar yen in a second, because what's happening here could be really significant itself. But pound dollar, 57.80 again. 57. Oh, that's the wrong one. 57.85, and then what's the high up here? It's the late November high at 158.25. Those areas may give you some sort of a pullback, but again, would be looking for support. This is a major breakout. Okay, the major resistance for this might not be until you reach at least half of the move, which is 58.80. Okay, and ultimately closer to 162, could be in the cards by the end of this month, given the just how important this breakout is. Okay, for British pound. So we want to see a pullback. We want it to be fairly sharp, I think, and we want to see it stop near old resistance. Okay, and these blue levels have been support before, actually. So it was support all back here. Okay, before we launched in 2013 on the upside. It's obviously precise resistance a number of occasions. Kind of got lost for a while with it here. It was actually support towards the very end of last year, and then we had obviously the big breakdown from there. Resistance again back in February, resistance again at the end of April, and then just blew through it. Okay, and that has obviously made a massive change in behavior for the British pound. All right, so if the market can revisit that level, it's kind of your median line, meridian line, whatever you want to call it, for the pound. It's a great inflection point, a great place to establish positions on this line, right? Basically, it's the lowest risk point to establish, a bias, right? Okay. All right. Raj has a question here about missing all these moves. Right. Well, you're never going to catch everything. In fact, the idea, Raj, is to make money over an extended period of time. This is a very imperfect business, trading. It's not for everybody. It's mostly, at least when you're catching larger moves with minimal risk. You have to be very precise. That's what we try to do, with these entries. So, I'm not sure how long, Raj, you've been around, but we have had some pretty big gains and pointed out some pretty big opportunities, over the last year and a half, and especially this year, we've had some pretty big moves in our favor. But yeah, it's not an easy business. Okay. Let's see. We got pound dollar, 57.85 resistance. Pointed that out, 58.25 resistance. The support, as far as I point out the slope levels, but as far as where these would come into play, I mean, it really depends, right? If you end up pulling off of here, and it's a sharp move, it's not out of the question that you test former horizontal levels, over the next few days. You've got 55.50 as a high, and you've got 54.90. So basically 150 to 155. 155 to 155.50, sorry. If it happens next week at some point, probably closer to the 55.50 area, because that's where this comes into play. All right. Okay. Aussie dollar, we'll get there. Question on pound Kiwi. Yeah, I'll look at that. I'll look at Kiwi yen. I've got a whole list of the stuff that we're going to look at here. Pound Kiwi, a lot of Kiwi crosses. Okay. Aussie dollar. Aussie dollar's breaking out after the broadening bottom, which again was pointed out at the time. We've actually reached a line that could provide some sort of resistance here. You can see that the black line, not the red one, but the black one extends off of the lows here in 2013 and 2014, January 2014, and then was actually resistance. It's a weekly chart, was resistance in January of this year. So we're almost there again. You can see on the daily exactly where it is. It's right here. Okay, it's in fact right in line with the year open at 81.29. 81, so the 81.30 area for Aussie dollar could provide you with resistance for a pullback. Again, just like the euro, just like everything else, the dollar is breaking down. So any sort of pullback would be viewed as an opportunity to get on the other side of the dollar trade. That is the downside. Use today's low as a breakout level, 79.60. Pullback, I'd be watching for former resistance as always, provide support, and 80.30 could be an area to look for support. But the biggest thing here is, that we're getting into resistance on the weekly chart now. Okay, bigger levels, probably closer to 83. So pull back here, look for support at 80.30, 70 pips lower. All right. If I look at a short-term chart, you can kind of see how that sticks out. Okay. Dollar CAD, also in full breakdown mode. All the moves on the, into the median line, just shy of the median line. Today, big move. We actually broke this support now. So focus is going to be on 117.30 to 118. These are longer term parallels, okay, down in this region. So you could end up getting a more important low down in the mid 117s at some point next week, potentially. So in the short term, what you want to look for is probably resistance near 120, okay? And I say 120 because you can see it's the spike low down here, but also if you look at it, this is an hourly chart. So if you look at the downtrend on the hourly, which is developed from just using price action from late last week, actually, 120 would cross. Basically, late tonight to early tomorrow. If you got to bounce into 120, that would be an area to look for near-term resistance, okay, for dollar CAD. Kiwi dollar is probably my favorite right now as far as levels are concerned. It's just super clean. Ended up holding the 73.58 level more or less, right? 73.60. Have a big move up today. We have slammed into the median line. Okay, that was the breakdown level. So we've come all the way back there. At this point, moving forward, I tweeted it out earlier, but 75.35 is going to be really big for Kiwi probably this week. You've got 75.35 confluence. Okay, you've got a sliding parallel from this slope that goes there. You can see that crosses through lows in April, as well as a high at the very beginning of May. 75.35 is also the upper parallel from this structure. It's also the 50% retracement of this move down. Last but not least, it's also weekly reversal resistance. Okay. In other words, it's where we closed the first day of May, which was the last day of the week. So that makes it weekly reversal resistance. All right. Also got the low right there on April 23rd. So 75.35 is just really, really big. Near term, again, we could see a little pullback. If we do, I'd be looking at 74.20, 74.40 as support for Kiwi dollar. You can check that out here. Shorter term chart, hourly chart. It's got the same levels on there basically, but yeah, here you go. So you can see this median line, which was resistance so well at various points, combined with a very short-term lower parallel, could end up providing some support. Again, this is around tomorrow morning in the U.S. or late Europe. So 74.20 to 74.40 of interest for support in New Zealand dollar. I'd also watch the short-term median line here. All right. So that, kind of where we are right now with Kiwi. I want to look at dollar yen actually before I go to with Kiwi yen and pound Kiwi and those other Kiwi crosses. But where we are with with Kiwi dollar stalling at this resistance, again from the sliding parallel, as well as the median line that is shown on the daily chart. Okay, where we are now kind of leaves me somewhat confident, I guess, in a Kiwi yen short at this point. But when we look at dollar yen, this could get real interesting as dollar yen's really putting the test on its sideways range, right? If we looked at the long-term charts here, dollar yen over the weekend, they'd written a bunch about it, talked about the long-term median line, right? Instead, the gut says lower into that level for support. So that might actually be the right, the right way to look at this. Again, this is a huge support line. It's the magenta one that goes through. It's a long-term slope. It goes through the gap. Okay, so we break that. The next thing would be this median line, but that's down sloping. So if you break that, which if we break this, I'd expect that we break this, then you're talking about getting all the way down into the median line, which is, again, all the way back. This thing defines the rally from the 2012 low. I mean, it goes all the way back, 3 years here plus at this point, 3 years and 3 months. So, we could have some really interesting action down here in dollar yen on this median line, which again, the rest of this week, it's not really until, 17.25 tomorrow, basically, call it 17.25 the rest of the week. All right. And then you'd have 2 equal legs from the high here. down at 17.15. So we do have possibility of a dollar yen break here. All right. And combine that with Kiwi, and where we are with Kiwi at the median line, we could have a pretty good outcome as far as the Kiwi yen trade is concerned. And here's Kiwi yen. All right. So Kiwi yen breakdown. Okay, we came into not quite, but pretty close to median line here, which was support, right? If you actually make a sliding parallel with this and put it more on the exact lows, then we actually did hit resistance today. So this could still work out. All right. And that's pretty much it. I mean, there's not a whole lot to say here. Kiwi yen's triggered. It's sitting at resistance. So, if it gets back above here, then watch out. You can see a rip all the way up, towards this upper parallel or something. But at this point, I like the trade idea. And again, just going back to a very big picture interpretation, the big support, first off, is probably down. First support's probably down near the 85.90 region. That's the long-term slope level, or a long-term slope level. But if we start to get down below here, and we all know how quickly these things can happen, so it's worth being aware of what could happen here. We do have the specter of a massive topping pattern. It's been going on for several years. So, Kiwi yen could really be in for, quite a move. Kiwi in general, right? As we've seen recently, pound Kiwi, of course, on the upside, which I'll look at next. So yeah, Kiwi yen, there's not a whole lot to say, as far as analyzing, this thing. It's rallied in a downtrend, and it's rallied from very close to support into resistance, and so far has stopped basically where one would expect it to, if this was still a valid trade on the short side. All right, so I like it at this point. If it starts to come off a little more, then you might actually look at adding to the trade. I'll try to do my best to point you in that direction. Pound Kiwi, obviously just a giant move. This was a chart that was posted the other day on the swing update. I'll get rid of this stuff so you can see a little better. But the long-term slope here, again, we have a huge breakout, and we could be getting up to 230 at some point, in the not too distant future. But the pullback here, right from the resistance level that was identified in the report, I'd be looking for support now at, the slope level down here, which, basically crosses former horizontal levels at 208. Okay. Want to see how it reacts there, of course. Just buying blindly into it probably isn't a great idea, especially pound Kiwi. This thing is pretty crazy. Not really a fan of trading it myself. More than happy to do analysis on it for you, though. But the reason I'd look at this line is because it's precise at multiple points. Okay. Big lows, 2012, August, February, high in 2013, high in, December of last year. So, this is also the breakout bar. Okay. So if we come down here and visit it, then, you put your stop below the breakout bar, right? You might have, very high reward to risk opportunity. It'd be like 208 entry, 207.50 stop. Again, not the biggest fan of trading pound Kiwi, but, from a technical slope observation, it's certainly interesting, right? You guys know, as far as I'm concerned, I'd rather trade Kiwi dollar and pound dollar. So, if Kiwi were to rally into 75.35 at 2 days, put a short on there, pound dollar will pull back at some point into, the year open at 55.50 or whatever, then, put on a long there. You'd essentially be long pound Kiwi, but, you might end up actually having a much better trade because you'd probably get better, more precise entries. Pound CAD is a very interesting one too. I actually think I talked about this last week in the webinar. Remember, the slope here on pound CAD, long-term upslope, rejected up here at the upper parallel at the very end of February. Okay? The median line is the level we were looking for to provide us support, but we actually bottomed a month ago before it. Okay, so the fact that we bottomed before that indicates a potentially, a very strong market. In other words, right? We could actually be headed higher in a much stronger uptrend than previous because the market has dipped and rallied before getting to support. Okay, so in order to time an entry with this, you look at a shorter term chart like a daily, and you can draw a structure here. And this is a pretty good structure to watch because you've got a median line that cuts through a bunch of price, lows on the days here, low on the day here. You have a gap here. You have a gap here. Gaps are significant, and when you have a gap that goes through, a median line, that it means that a lot of significant things are happening around the median line. So what you would look for at this point would be some maybe, get some support on this median line, be about 86.75 tomorrow with pound CAD. If it broke through there, you'd look for support in lower parallel. So this is something to watch going forward. This is not a short-term idea. It's not even something that would last a few days. This is probably something much longer-term in nature. The level that sticks out to me the best as far as price level is concerned for entry would probably be about 85.30. Reason being, you got the month open at that level, and you can see that you've got all these, former resistance all back here, right, from last year in 2014. So I would keep an eye out on the 85.30 area, especially as we move into the end of the month. So pound CAD, just put it on the back burner, I guess, for now, but you want to watch it and see how the market trades if it gets down to 85.30. Pound yen we'll look at as well. Coming into a super interesting slope level here. Stefan says, would you publish pound CAD as a swing trade? Yeah, I mean, if the setup was right, I probably would. All right. So remember last several months ago, we had done a video on pound yen, and we're coming into the slope now from that really long-term video again. So the same level that actually got the high here in the end of February, pound yen's coming into that same level here right now. In fact, we traded into it, and we're making a key reversal today. I don't think this is going to be a J spike. It's probably much too small a range to be a J spike, but let's look. Yeah, let's see. Yeah, too small a range. Today's range is pointing, well, if we move 6 more pips on the range on the day, it could be, but at this point, it wouldn't be. In any case, pound yen, I would expect a pullback here. You could get support down at 185. Okay, and that is the median line that crosses with the low and the high and the low that we've had here just so far this year, the big pivots. Okay, what's good about this, remember this is the zoom and retest trade. If it zooms and then it comes back and retests it, you would look for support here with the long for continuation on the upside. What I like about this is that I think it correlates well with both the idea that the pound at least pauses up here, and the idea that dollar yen might actually try to trade off a little bit more, right? Because we're talking about 85 support. It's 250 pips lower than where we are right now. And it also, this median line also, you can see, isn't the word I'm looking for, intersects with 185, which is horizontal resistance, formal horizontal resistance, February high over the next few days. All right. So I would be looking at 185 as a huge level in pound yen, but now as support, of course. Finally, I want to look at Euro Aussie. Good for a short-term idea, in my opinion. You've got Euro Aussie, Euro Aussie, Euro Aussie. Euro Aussie. So Euro Aussie, good short-term slope. Basically, look for resistance up at these former lows, and the sliding parallel is where you want to look at now. Okay, very precise on the recent highs. You know, probably coming in tomorrow around 140.80. So that's again 140.80, 140.80. Would be looking at a short into that with a 140, 130 stop. Take it back down to 138.90 or 139 would be where you want to take Euro Aussie on the downside. All right. So Euro Aussie is probably the cleanest short-term setup at this point. You know, and when you look at something like that, forget about, you know, the euro or whatever itself against the dollar. You know, it's threatening a bigger breakout, and you know, you might be deterred from looking at something like Euro Aussie on the short side. But if you just look at it itself, look, it's drifting lower. Okay, it's very well defined short-term slope, so you do have that set up, and that's really all you can ask for, right? So I like Euro Aussie a lot as far as a bounce into 140.80 and then continuing lower into, again, the mentioned 38.90, call it 139. That's it for all the stuff that I've got to get into. Obviously, I'm going to look at questions now. So there are a few things that were asked here. Roseman asking about dollar index and gold and whatnot. Yeah, so the dollar index we actually covered in depth earlier in the webinar. Haven't really looked at gold, but gold is threatening, obviously, a pretty big breakout at this point. You know, after more or less screwing with everybody for seemingly, 2 months straight, gold has finally decided to make a move. It's interestingly at resistance right now. In fact, it's literally trading to the tick at resistance. Again, just like the euro, the very short-term momentum probably indicates that this is going to be a bigger move on the upside in gold. Okay, it's up over 2% right now after, consolidating in a very tight range. So hopefully today is the breakout day for gold. And if it is, you should probably see the Aussie continue a lot higher and the dollar yen continue a lot lower in the coming days and weeks. But again, as far as near term is concerned, you could get a pullback into this level, the sliding parallel, which was old resistance for some time. Right at about 1208, yeah, and that actually is right along with right there, 1209, old highs. This could end up being the slope to follow at some point, this one. So you can see this one that we're at right here. This goes all the way back to high, all the way back in July of 2014. So we break above here, and it's a pretty big deal. And the next move probably would take us to the 13s at some point. So that's gold. Pound yen and euro yen. Raj asking, are they correlated? Well, yeah. I mean, it depends if they're different pairs. I mean, pound and if euro and pound are moving together, then they're correlated. But if they're not, then they won't be as correlated. They have half the same currency there again, right? So recently, obviously, this year and most of last year, pound and euro have done fairly different things, so they haven't, moved, as much together, right? I mean, it's different stages of the market too. Sometimes if it's a yen type of, market where all the yen crosses are going together, then yeah, it's different. Um, they'll be moving together, but I haven't run a study or anything on it at this point. Let's see questions. I also had a question on. Oh yeah, I had a question on. Stefan was asking earlier about kind of about strategy. So Stefan was asking about when basically combining the scalp triggers with swing. So here's one thing. I'm much more pure in my technical analysis, I think, than Mike uses triggers again with the RSI stuff, and it's really, really short term. They're like 5-minute charts. Right? So for me, like this is euro yen, right? And you were asking about euro yen specifically. Here's a weekly chart. Okay, I'll make a lot of my trades or decisions on stuff like this, right? I mean, we were pointing out big support, big resistance for quite some time, right? In these pairs like euro yen. And now we're at resistance, and we put in a little toppish looking candle last week. So that tells me to look for the short side when we're up here. Okay? That doesn't mean that you want to necessarily take the triggers on a 5-minute chart, though. Yeah? So you got to remember what kind of a trade it is, right? This is a trade, where you're basically looking to pick, sell big time resistance, okay, up here. So inherently the momentum is going to be up, okay, especially on the shorter term charts. And when you're selling scalp triggers against the momentum, it's probably not going to work out too well. In fact, you'll probably just get chopped up really bad. So a trade like Kiwi yen might be different, right? I said that Kiwi yen might be a candidate to do it because Kiwi yen is just come into resistance, but it's more in breakdown mode, right? This is more in breakdown mode because it's the ZRT trade. It's the zoom and retest, zoom through retest. So if Kiwi yen started to break down from here, that might be a little more of a valid combination, if you will, right? Personally, I'm not a fan of combining short-term, long-term, whatever. As you know, I'm usually trading for 150, 200 pips, and I take a lot of losses for small amounts. The scalp thing's a totally different ball game. So I wouldn't really combine them. I would kind of figure out what it is that you want to do, or if you want to do both, you trade 2 accounts. I don't think it's a good idea to combine them, because what you end up doing is you kind of make a mess of, you might need to sit with the trade for a while and don't do it. But when scalping, oftentimes you want to go with short-term momentum, which is what the momentum triggers are meant to do. But when you're trading swing-wise into entries on longer-term levels, most of the time you're going against the short-term momentum. You're trying to go with, the longer term, or find the more important peaks and troughs, right? Yeah. So, as far as here's an example, okay? Euro dollar. So euro dollar, this is a 240. Okay, 240-minute chart, 4-hour chart. Going against the short-term momentum. This is a 4-hour chart. Okay, the momentum is starting to really fade pretty hard, actually. You've got peak, and then at this point, we actually do have a pretty big divergence because we made a new high close up here, even though the high wasn't a new price high, but we made a new close high. So you've got pretty nasty divergence. up here. So the momentum's really starting to fade. But if you were to look at like an hourly chart, right, you can see the momentum is absolutely super strong. Okay, so with this, if you were to go to like a 5-minute chart and you start to, fade the, or not just fade, but do like a short term, a momentum trigger. It's like a trend line, right? So you would have just gotten one right here. Okay, you would have gotten one up here. Okay, maybe this one would have worked, like what, 10 pips or something you'd have right now. But the problem with that is that you've got this super strong hourly momentum. Okay, so it's probably a better candidate to scan for markets that are in, like with the euro, for example. Just flip it around. What you'd probably want to do is actually look for the market to come down to support and then trade the other way. So if the market came down to support, you might want to trade, a breakthrough trendline resistance on RSI or something, right? Again, I'm not like an expert with the momentum triggers or whatever. I prefer really to look at the dailies and the weekly charts, and then I'll have the hourly on my mind where bigger levels might be, and I'll have the 4-hour on my mind as well. But once you start looking at too many things, you'll just start running in circles. So best to just stick with the levels, in my opinion. Okay. Stefan asking for swing decision. How short term of a chart would you? Yeah, 1 hour is about the shortest term I would go, to be honest with you, Stefan. When you look at a weekly chart, for example, right? Weekly and dailies, which is more what I'm interested in anyway. The slope, we're getting into levels that are actually pretty big resistance, right? Obviously, catching the turns can be quite difficult, right? When you do, it's pretty nice, but it's really hard to do. So we're at a level much like we were back in 2010, okay, where we were coming off deeply oversold, and RSI had, given some sell signals that didn't work for 3 weeks. The 4th week, it worked like a charm. The market fell 600 pips that week, right? We're looking for something similar this week. Hasn't happened, right? So we'll look and see what happens at 1450. All right, so that is Stefan. Awesome, man. Good stuff. I'm glad. Exactly. You got to separate the two. Really do. Really got to separate them. All right. So that's really it for now. Again, Euro Aussie for you guys that want, trade right now is probably the best looking thing as far as I'm concerned. Euro Aussie, looking for this resistance up into, the 140.80 area. Okay, up here, sliding parallel. This thing, make it red, stick out, bearish. So would be looking at 40.80 resistance with a stop up above 141.30, and then targeting lower down here, your 139. Other things that are interesting right now, pound crosses in general pulling back, especially pound yen at big resistance. Dollar yen threatening a breakdown, seems like a big story. Aussie dollar has broken out, would look for any sort of support down at the former highs for Aussie, probably near 80.30. Kiwi has really clean levels to trade in both directions, in my opinion, with 74.20, 74.40 being support and 75.35 being resistance. There's a confluence there on Friday. What else we got? Euro dollar, this morning's move really kind of throws a wrench in what I was thinking was going on. We were at really big resistance. We're still at really big resistance, but again, the short-term momentum makes it very difficult to be on the short side at this point. So with Euro, see how it trades, but would be looking at 112.90 support for Euro dollar. Next level might be 115.30, 114.50 is a level I would also have in mind. I was going to do dollar CAD, watch resistance near 120. Breakdown levels, could see the mid 117s by next week. And that's really it. So in general, dollar's breaking down, very close to big supports to watch. around where we were in early February across the dollar index, both dollar indices, I should say, ICE and FXCM. But we could see a couple more days of, back and fill into those levels, so just be wary of that. All right, so that's it. Thank you all for joining. Want to get this up and archived ASAP. If you were coming in late or you weren't able to see, you weren't able to see the whole webinar, especially the dollar part. I really went over that in the beginning. So you're going to want to watch that later. So we'll have this archived. Stefan, thanks, man. I'm glad to help you out. Yeah, biggest thing, keep those two disciplines separate. Short term, long term, you don't want to be combining them really too much. If you have to, trade two accounts, it's totally fine. A lot of people do that. All right. All right. Thanks again. Again, Jamie Saettele signing off here for the SB Trade Desk Midweek Strategy webinar on May 13th. All right. Take care.